All right, we all know that getting chips for your solutions is probably one of the biggest bottlenecks in AI today. While most people know Taiwan Semiconductor, all of the things that they bring to the table as far as foundry capabilities and the ability for companies like NVIDIA and Broadcom to create their chips, very few know about this company I want to talk to you about today. They're also out of Taiwan, but they're a much more niche foundry capability company that actually is spanning the globe, and they're growing quite wildly. There's even a rumor right now, which is why the stock is taking off, that they've done a deal with Intel to bring new technologies and allow Intel to play more in the chip game going forward. So I'm the Wall Street Yardie. Today I wanted to talk to you about United Microelectronics Corporation, who they are, what they do, and what levels we're going to watch on the chart to make sure we get a good price when we invest in this one. All right, taking a look at UMC, United Microelectronics Corporation. We see here on the Wall Street Yardie app, it's a little overpriced. We are in the midst of an AI chip cycle right now that is just hotter than ever. So anyone that can step in, add capacity, help the AI space like deliver on their chip goals is going to be trading at a premium, and UMC is exactly that type of company. Because they're overpriced doesn't mean I'm going to walk away necessarily, but this is definitely something maybe I keep on the watch list, or in this case, this could be a speculative play. So if you have a little extra money, portfolio, or in your account that you're not putting to work, you don't mind if you lose a little bit of it, right? Because this is the name of it. Because this is a speculative play. This is not an investment or a long-term play. Semiconductor chips work in a cycle, and we're, getting mid-cycle, maybe high cycle right now. This is why you start to hear all the bubble talk. And the long-term sticker price for UMC is right about 1738, 1740. Now, we haven't factored in any growth that might come from this AI cycle yet, right? Because we haven't seen it delivered. But we're going to think about that. Our PE ratio is a little bit elevated here. They're normally right around 20, but because we're in the height of the cycle, 40 is acceptable. 30 to 40 is an acceptable PE ratio for any high technology company that's out here that's delivering on what the market is looking for, which is certainly what UMC is doing at the moment. They also have a nice little dividend that you can play for here as well. Market cap is not that large, 63 billion. It's big, but it's, in the face of AI, this is not big at all. As you'll see here shortly, UMC is a niche play inside of the AI space. So what do? Let's jump right in. So UMC, they are global semiconductor foundry. They specialize in bringing manufacturing to the chip space. So they help you create the integrated circuit wafers that you need to manufacture your chips, test your chips to make sure they're quality, make sure they're going to do what they say they're going to do. And they focus on the auto industry, the industrial tools industry, some of the power management capabilities that we need now for smart power management in the world that we're dealing with now with AI and everything being connected. They bring to the table the knowledge around how to manufacture these chips. They have the foundries, they have the locations, they have the real estate, and they have the capability to do these things for these specialized industries. This is why they are of value right now. They can bring a niche skill capability to bring solutions for their customers. So their customer then avoids spending billions and billions of dollars trying to build out an AI data center or in this case, an AI foundry to manufacture the chips that they might need for their cars, or they might need for their robots, or they might need for whatever other device that they're developing that needs chips inside of it. They generate their revenue through this manufacturing as a service model. You bring them the design of your chip. They help you actually manufacture that at scale. So that's the value that they bring to the table. The biggest risk for them right now, honestly, is just the Strait of Taiwan, not the Strait of Hormuz, but the Strait of Taiwan, and any conflict that might arise with China. So if China invades Taiwan and starts to take over, we really don't know what that's going to do to the chip space, right? So Taiwan Semiconductors also has this risk, but UMC has it as well. And they're just a much smaller player in the game because they're focused on that niche market that we were just talking about. Now, their mode is kind of strong. It is a little narrow because they're niche, but they have a lot of intellectual property. They work in a lot of regulated spaces. So when you're building automobiles or medical devices or whatever it might be, you need to make sure that those devices are going to work. So they already have the expertise in this space, so that gives them a leg up. And then the other thing is a switching mode. Once you go with them, as a customer and they understand what you're trying to do, your designs and how you build and design your chips, you're not going to pick that up and just go over to the next foundry. It's going to cost you a lot of money to do that. So, you know, stuff would have to go really bad for you to spend the money and do that. So that's what we're looking at with this company. That's the story. The reason why the stock is kind of taken off in the last couple of days is there's also a rumor that they're partnering with Intel to bring some smaller nano chip type capabilities to the US. So they're partnering with Intel. Intel has capabilities over in the US in Phoenix. They're already talking about partnering with them. So that could help relieve some of that Taiwan risk that we were just talking about as well. But that partnership hasn't been confirmed. It's completely speculative. And then the other thing is their earnings are going very, very well. So their earnings have started to pick up here. Free cash flow is picking up. As you can see, this is just a steady grower, right? The company is just a steady growing company. Earnings have been growing pretty steady on this one. So the story is good. This is a good foundational company. They are just, you know, trading at a premium right now. And we want to find a place where we could maybe jump in, get a little bit of value, figure out where, you know, we might want to set our levels or stop losses. So let's jump on over to the chart to see that and continue on talking about how we might want to look at trading this particular name. All right, on the charts now. One things I like to do when I look at a brand new company is start the chart off clean. No indicators other than my volume here at the bottom. No moving averages, no RSI, none of that. I like to see the price action on the candles, kind of see how that's flowing, get a little feel for the movement of the stock, right? And the movement of this price action. And the one thing that really stuck out to me when I first pulled this up is that this stock gaps like crazy. At first, this would be a major, major concern. But once I, you know, looked at the stock and started understanding who they were and what they did, I realized that this company is a Taiwanese company. The listing on the New York Stock Exchange is actually an ADR, so it's just a paper representation of the company. This is not the full company that's registered here in the US. This is a Taiwanese company. They're registered in Taiwan, and that's where the company actually exists and actually trades. So the gaps then start to make sense because the Taiwanese Stock Exchange operates on the Asian hours, right? So it's overnight for the US. And what happens is whatever price action happens over there overnight is going to get translated when the US market opens. And then sometimes that means we're going to gap up or we're going to gap down depending on what happened over in the Asian market. So that's why we're seeing all these gaps. So when you see gaps on a chart like this often, these gaps become 100% unreliable. You kind of have to throw them out. You can't trust them as support and resistance like I always talk about. So we need another way to find our levels here before we move forward and try to make a decision point on our chart, right? So we got to make our plan. The only way to kind of figure this out is we have to go to a higher time frame and go to the weekly chart. These candles are now weekly candles. This is a way for us to quickly see if we could smooth out some of those gaps. And sure enough, the gaps are kind of gone, right? So we no longer have a bunch of them. In fact, we only have a few that we need to pay attention to. There's one way back here on the left. Wasn't that big of one. It already filled. And then we also have another one here, one more here, and one other one here. So these two gaps are still open. And then this third one here got filled. So the reason I like to talk about gaps are support and resistance on your chart. But when we're looking at the gaps that like we did on the daily, where there's just gaps everywhere, we can't trust them. So zooming out here to the weekly, everything gets smoothed out, and we can now find some levels. And the two levels that kind of pop out right away, I already pointed them out. So we have our gap here, and then we also have our gap here. So these two are at some weird prices. So what I'll do is just kind of round things out. We'll make this $24. So that'll be one level there. And we'll just round this one up to 1850. You know, market likes round numbers anyway. So those are good levels for us to watch. I know this one peaks above our $24 level here a little bit, but that's okay. We are on the weekly candle. So we'll look at that in a second and what that means. So the other thing we want to do is where are the other levels that we need to pay attention to? So what we want to do now is flip on over back to the daily chart and see if that tells us anything. We'll flip back to the daily chart here and we see that with those two levels, here's our little peak above. We had a nice little range going here for a couple weeks, it looks like. And this kind of becomes the new base, right? This range between 24 and 1850. So if price gets back into this channel here, that's what we're going to call this zone as a channel, and it comes down to 1850 and starts bouncing up, we could see it kind of just go sideways in this channel. Now, that's not the play we're necessarily looking for, but because we just did our homework on the chart, we know this is a channel we could trust. And if the price starts to break below 1850 with momentum, meaning high volume, right, then we know that maybe it's time, or the momentum for this stock is over, and that can become a very hard stop loss for me when I'm looking at this. So this is why we like to have 2 levels below, because it becomes a nice area for us to play. We could also play this, if we see a bounce off of it, as a good support base with our stop loss somewhere below that, right? So, you know, that will be your decision as a trader, where you place your stop loss, or if you place a stop loss. But technically, this is where, under 1850, this is where the stock starts to break down and the uptrend starts to go away. So that's why we want to make sure we kind of mark that on the chart. Now, we got these 2 levels. The other problem we have on this chart, looking at the daily, is we're at all-time highs. So if it goes higher, what's the next target, right? Where should I be watching, or where should I be looking to maybe start taking some profits, maybe selling calls, maybe doing something to protect my position, right? Maybe that's the level I get to and I move my stop loss up, right? So we don't really have a way to do that because there's no data here. So we have to go over to our handy dandy Fibonacci retracement tool. I also switch back to the weekly, so we have that smoother chart like we talked about. And here you see we had a nice little pullback here. So I'm going to grab this low because this is a nice pullback area. It is also support for all this other stuff here. We'll look at it in a second. And I won't go to this all-time high because we haven't proven this as a pivot yet. And I spoke about this in a couple other videos. So what I'll do is I'm going to use this high here instead from May 26, because we did pivot down. And the beauty of this candle afterwards is this is what you call a bearish engulfing candle. You'll notice this big red candle engulfed or covered up the entire body of the candle before it. Now, you'll see these, and when they pop up, bearish engulfings are usually pretty reliable, but this is a momentum name, and there was no confirmation the next day. When you see a bearish engulfing candle, you're going to want to see, you know, the stock stay, you know, below this low to confirm that the next day is true. In this case, it did not. We did get a lower low and a lower high. However, the candle was green and it closed towards the top of the candle. So this was not a good confirmation, or a confirmation at all of what happened. And you'll notice this is also where we had our support area right around the 1850 level and took off for the next couple weeks, because these are the weekly candles we're currently looking at. Now, what we did get by putting the Fibonacci there is some levels above. And you'll notice that our high for this week here, ending June 26, we kind of peaked right here at the 127 level, which is a Fibonacci extension level that we definitely want to pay attention to. So the Fibonacci lines are working for us here on the weekly. And then we also have a couple levels above that now that we can then look and trust. So 30 and then 33, and then above that, let's call it 35, right? So we have some levels here we could pay attention to. These are levels, maybe you move your stop loss up if you want to stay in this longer term and ride the wave. And that might be one way to play it. So if we flip back over to the daily now, we could see these things start to really line up very, very well with the rest of our chart, even through all of the gaps that we were so concerned about at the very beginning. So we can then start marking extra lines here if we wanted to. We'll keep our 2 major lines, but what I did want to point out was our 2 major lines, that 24 level line lines up right here with this high, as well as the 1850 line now lines up with the 618 level, which is a huge technical level for Fibonacci retracement and bounces, right? So we already marked 1850, but we were looking here 1781. Remember, support and resistance is an area, not a point on the chart. So it kind of fits right in with these 2 small candles here. So we have a nice little zone if price ever pulls back in here, where we could start to truly play a bounce, right? And find good value on that bounce, right? So the good risk reward at that level, and that's what we're looking at there. So I'll keep that on there. I'll mark one more level here above just so that we have it on our chart. And I'll actually do 2 levels above, which is technically what I like to do. And then we could get rid of the Fibonacci so this is not so noisy. Like I said, I like a clean chart. This looks good. We could even now turn on our moving averages. We're not really paying attention to these too much because this is a huge momentum move up. We can expect the moving averages to be in order like this: 20-day above the 50, 50-day above the 200, and they're, you know, kind of separating from each other. You might want to watch and see if when this 20-day might roll over and slow down. That might be the beginning of a dip that you might want to pay attention to see where that gets to and possibly bounces. But these are the levels we're watching. Key ones for buys for me is 24, and then if we break through that, maybe there's even another dollar cost average buy here somewhere around 1850. So I'm the Wall Street Yardie. Hope this was helpful. Have a good one.